Hello traders, my name is Dimitris Karalampidis, and in this video I'm gonna present you my main alternative counts on the euro against the US dollar. Obviously, this sharp rebound broke above the out of this range, and the momentum has turned bullish, and there is no doubt that prices are going higher from here. I can't say for sure whether this correction is finished. There is high probability that wave 3 has finished here, and then we could have an A, B, C already finished here or moving higher from here. But there is a possibility that this correction will continue, but it should not move below this this trend line here. This trend line, which connects the lows connects these lows here, and should provide support as it did here in the wave 4 of 3. The point here is that with this rebound, prices have entered the territory of what we believed that it is wave 1. As we can see from this gray line, here is where prices are now. And if this is actually the end of wave 4 and this is the beginning of wave 5, then there are a few options that allow us to count this as a wave 5 while prices are in this level. The first option would be to count wave 1 here, although we don't have a new low here, or we can count this move here as 1, 2, 3, 4, 5, and then A, B, C for wave 1, A, B, C for wave 2, and then 1, 2, 3, 4, 5 for wave A, and wave B to be here, and from here to be another 5-wave move to the downside, and count this as an A, B, C for wave 3, and thus an A, B, C from here, which will finish wave 4 of 5, and then an A, B, C to the downside that will complete wave 5 in the form of an ending diagonal. However, looking at the picture from a higher time frame, a larger time frame, we can see that the form that it is taking, and if we count this as a triangle from here like that, and here was the breakout, prices should move at the level of 113.25 in order to have an equal length wave C with wave A, and then we should have a 3-wave move to the downside, breaking this low to complete an ending diagonal that will have a very odd form. That would be the first alternative, the first bearish alternative. And although prices can reverse directly from here to the downside, the internals of this move suggest that we have at least one more wave to the upside, and since wave 3 have reached already 112.50, it is highly probable that this target 113.25 will be reached in the coming sessions. And then from here we will have a correction to the downside, or an impulse to the downside. In case we have an impulse to the downside, then the probabilities are that this ending diagonal scenario is the correct one. So So this is the one scenario. The other scenario is that we have wave 1, wave 2, and this wave here is not wave 3 but rather wave 1 of 3, and this would be wave 2 of 3, and we are looking to much lower levels because we then expect wave 3 of 3 and several other waves until we finish wave 5, and that would probably move the pair below parity. But the problem with this count is that this correction here, this range, if we count it as a triangle, we cannot have a triangle in wave 2, and thus this scenario of wave 1 and 2 become less probable, because in order to allow for a wave 2 here, we will have to count this correction here as wave 1, wave 2, wave 1, and then wave 2, which means that prices will have to move to much higher levels than this in order to complete all the subways, and in this case prices will move very deep, will retrace very deeply this move here, which make it less probable that this is actually a wave 2. And if I remove some Fibonacci levels here, we can see that prices have already surpassed the 61.8% Fibonacci retracement, which is the most common, and they're heading to the 78.6, and actually the place at which it will wave A, if it is a wave A, will become equal to wave C if it is a wave C, is at 1325, which is very near this 78.6% Fibonacci retracement of this move. We will have to wait and see the reaction of the pair at that level, and given the internals of the move, we will probably have a decline from there, but we will have to understand the structure of the decline, if it is corrective or if it is impulsive, and then decide which count is correct. I have personally decided to adopt a much more bullish outlook for the pair, and I count this as the end of wave 2, and I will show you on a higher time frame what I mean. And I believe that this is wave 1 to the upside, and this is the correction for wave 2, and then we have a nested wave, a nested 1-2 correction, 1-2 and 1-2 within this, which is called a nested 1-2, which is a very bullish pattern, by the way, and then it follows a very sharp rebound, and I believe that we're moving to much higher levels from here. Looking at the daily chart, I can show you what I mean. I count the decline as 1, 2, 3, 4, and then extended 5, completed in March 2015. Then this move here as wave 1, and a wave 2 correction that has started during May and has finished in December. That's around 7 months of wave 2, which is a little odd, but still possible. And from here we have WXY for wave 2, looking higher from here to much higher levels. The alternative, of course, is that this was wave 1, wave 2, wave 3, WXY for wave 4, and this is the ending diagonal that I was talking about, or wave 1 and 2 of wave 3. And there is also another bearish scenario which suggests that the whole thing is still a correction and prices will move again to this level here to complete wave 4, but this is less probable because wave 4 starts to get too lengthy for a wave 4, and actually too lengthy compared to wave 2, which suggests probably that we're talking about a different degree, in which case there are numerous other scenarios that come in mind, like the scenario that this move here until here completed 5 waves and it finished the wave A, and this move here that will finish somewhere here will be a wave B, and then another 5 wave move to the downside to levels very, very lower, which suggests a very strong dollar, which I believe that is not the case. But you never know. Those are the alternatives. What makes me more bullish than bearish is mainly this weekly chart, because we even if this whole Elliott wave count is incorrect, at least at this place here we see how prices have dropped sharply until here, and we have a very long distance between the SMAs, and after we reached this level here, prices were rejected, and since then prices are trying to approach the SMAs. They did it here for the 21 week SMA. After several attempts, they finally broke above it, and they reached the 55th the 55th week SMA. They were rejected twice, and they moved back below until they were rejected around these levels again. And then for 1, 2, 3, 4, 5, 6, 7, 8 for 8 weeks this 21 week SMA was providing resistance until last week, which when finally prices broke above it, and they also broke above the 55 week SMA. And this is the first time since July 2014 that we have a close above the 55 SMA, and that gives a clear bullish signal. Also, if we look at the momentum indicator, the 14-week RSI, we see that during this period here it has broken above the 48 level, and during those attempts to move back below, it was testing this level until it finally broke it here with this large candle. And large candles usually suggest change in the general direction, whether it is from a downtrend to an uptrend or a downtrend to a sideways move. They usually the break with such large candlesticks suggest changes in the direction, and here also breaking below this level. This is what happened. From a sideways move we moved to a downtrend, and the rebound after the ECB interest rate event back in last December found resistance at this SMA again, and at this level in the RSI, and since then there were prices were struggling to move above the SMA, and the oscillator was struggling to move above this level, until finally both of them broke above their resistances, and they closed there. And that's a clear bullish signal that suggests that prices are moving towards this SMA in the long term, which at the current point lies at around the 124 level, and this is what I am expecting that we will see in the coming weeks and months. That pretty much sums up everything. We will have to wait and see which scenario will play out best, and there is a lot of potential here for profit, but I believe that because we're talking about a transition from a long-term bearish outlook, from long-term bearish trend, we had almost 1 year of transitioning here, and now we're breaking for a bull trend. There will probably be deep retracements, and that will make trading difficult, but overall I believe that this will be the direction that the pair will take for the coming weeks and months. Thank you for watching, and have a nice weekend.